Welcome back to Business Week on Arise News. Today, Nigeria's black gold, its oil, is our focus. Heineken Ogbue, Nigeria's Minister of State for Petroleum Resources for Oil, recently reaffirmed Nigeria will attain its 1.7 million barrel a day oil production benchmark for 2024. A pickup of the country's oil production in September this year, despite drops in October and November, has raised hopes that this positive trajectory will continue, given the need to shore up the country's forex revenues and ensure a stable investment environment for both domestic and foreign investors. Today, I'm thrilled to be joined by 4 experts. Amongst them are investors, operators, oil service companies, and industry specialists to discuss the sector in 2023 and outlook in 2024. First, in our Abuja studio is energy economist and board member of Obsidian Achena, Emmanuel, known for his deep commodities market insights. Keeping me company here in our Lagos studio, our immediate past president of the Women in Energy Network, Ogbue, who is also CEO of Sigma, a company that provides EPC services to the oil industry and has previously worked for SNEPCO and CNOOC. I also have Charlotte Essiet, Director of Corporate and Regulatory Affairs at AOS Oil, one of the foremost indigenous oil field service companies in Nigeria. With a degree in mechanical engineering, Charlotte has previously worked for Halliburton and Baker Hughes. Last but by no means least is Karim, the CEO of leading industrial group Shoreline Energy International. The company's subsidiary Shoreline Natural Resources Limited is also one of the foremost independent oil producers operating a producing field, OML 30, in the oil-rich Niger Delta region. Thanks for joining us on the show today, ladies and gentlemen. Great to have you.
Thank you.
Thank you.
I'm going to start with you first in Abuja, Kelvin. Since you follow and track global markets, tell us the current state of global market dynamics and how you think that might impact what is happening in Nigeria.
Rolake, good morning. Thank you so much for having me, and good morning to everyone in Lagos. Well, to be honest with you, I just saw yesterday that the Houthi rebels actually fired a missile that hit Maersk and Apagliot shipping lines, and the 2 shipping companies have put out statements to ask all their vessels to stop sailing. And you know, the interesting thing is that in the last 24 months, we've come from, or in the last 3 years rather, we've come from COVID-19 pandemic, where we saw negative oil prices. We've come to the Russia-Ukraine war, and Russia being excluded from the SWIFT system, and Russian banks unable to open LC for Gazprom and the likes to export crude oil from Russia. Now we've come to the Israel-Palestine war and all the collateral damage that comes from that. And oil prices have gone up and have come down. There's a consensus among energy economists around the world that oil prices are going to stay around $84 per barrel in 2024. I think that that consensus is good, but that there's a likelihood we might not be able to predict what might happen because of political indifferences and regional imbalances like we've seen in the Middle East. Now, in all of this, I have not seen that this has impacted on the Nigerian oil sector negatively. We've failed as a country to take advantage of high and rising oil prices because of the inefficiencies attached to the upstream sector, from the fact that you have 42% in terms of your production sharing contract agreements, but only 36% of most of the blocks allocated are actually functional, and Nigeria is struggling to meet up with its OPEC quota. So in essence, the issues that has come around the world from both OPEC and non-OPEC members, producing countries and the industrialized countries, it's supposed to be an advantage in Nigeria in terms of its FX revenues, but we've not seen that to be the case.
Yeah, thank you very much, Kelvin. And I'm going to come to my guests in the studio now. You've sort of heard the context of what's happening. I'd like to start with you, Kola. There have been lots of developments in our sector this year, and often it's easy to focus on the negative. But can you tell us what you think some of the positive highlights of the domestic oil and gas sector have been?
Thank you, Rolake. I think one of the biggest movers in the Nigerian oil sector is security.
Yeah.
We've seen the effect of security not being there, and the oil thefts and illegal refineries in the Niger Delta. I think since this government's come in, they've put a big focus on that, and that's seen a huge improvement in the security in the Niger Delta, most especially in the Western Delta, where we see the losses has gone as low as 6 to 10%. In recent times, that's a huge a gap closing on that. The other area is we see an increased focus and dedication from government in talking to the different operators in the region, in trying to work from the international oil companies, also engagements with the local oil companies, in finding out what the problems are and how government could interface to making it easier and better for us to operate. That's very, very important, because if the engagement with your joint venture partner, in some cases, in most cases NNPC, when those work well together, you see an improved scenario in the oil and gas sector in Nigeria.
Yeah, fantastic. And I know for me, you know, you run an oil service company and you've been in this business for many years. You've seen it all. What would you say have been some of the positive changes you're seeing in the industry from where you sit as an oil service operator?
Thank you very much, Rolake. I was very happy to be here to be speaking about the 2023, which has been a much better year for us in the oil service space than 2022, because there's increased activity, rig count is up, and we have well rigs, we're actually working. But I think in addition to that, investor confidence is restoring.
Okay.
Because Nigeria, I mean, obviously transitioned successfully from one democracy to another. And that, you know, is really the basic thing that investors need to be able to put money in the sector. The other thing that I think is critical that has happened and must continue to happen is the stable regulatory environment we have with the PIA. So even us as a company have invested upstream in the marginal field and the gas flare commercialization space. So I think there's positive, there's light at the end of the tunnel, there's stability, there's investor confidence, and there's increased work.
Okay.
There's a long way to go though, you know, because...
And we'll talk about that long way.
we're worried about losing capacity.
Okay.
So, you know, there just needs to be heightened effort
Yeah.
to sustain that investor confidence.
All right, so pretty much resonating with what Kola said. Charlotte, I'll come to you because I know you deal a lot with regulatory affairs and corporate affairs. So what have been your major highlights?
For me, it would be the war against crude oil theft.
Okay.
That has really been very impactful. We've had increase from 1 million barrels per day to 1.7. And that also has given a lot of positives to the industry. The national treasury, of course, is significant. With the upstream itself, I'd like to highlight where we've had a few investments. We've had the NAUC assets being acquired by Owando. That's positive. We've also had Equinox having to have had 54% of OML 27-28, 1 to 8, the Agbami field. And then you've also had one other person, I think that was Equinox from 54, move from the Owando. Now go to downstream. Downstream, we've had the same Agbami field has been able to give crude to the Dangote refinery.
Right.
Now, and if you look at all of that trajectory, it's a lot of positives.
So interesting, you mentioned the assets. So is a sign of, you know, restored investor confidence, the idea that assets are changing hands. Do you all read that as a sign of investor confidence? I see Kola sort of...
I'm not sure. I think what's important is, I think Nigerians, we shouldn't get carried away. The international oil companies a right-sizing portfolio, and this is what they do year on year.
Okay.
And Nigeria, what is happening in Nigeria with their assets in Nigeria, when people talk about this companies are exiting, no, it's not so. They're right-sizing very old, aged assets.
Yes.
Some of these assets, I'll give you an example. OML 30, some of the fields started producing in 1960. We have infrastructure in OML 30. Commissioned, the Transforcados pipeline was commissioned in 1969. was as old as me. So this is important. So when these guys are selling, it's not like they're doing some greater good. They're monetizing this asset to go and invest it elsewhere. Where new players like ourselves see opportunities to come in, reinvest, use local expertise, where oil and gas exploration and exploitation is in second and third generation in Nigeria, is now going into play. So those are the opportunities, but it's not necessarily a major swing in the sector.
Okay, fantastic. So we have a lot more to discuss, but we're going to take a short break now. And when we come back, Kelvin, I'm going to come back to you to talk about the budget assumptions for 2024 before we delve into some of the more difficult aspects of operating in the sector. We'll take a break now. Don't go anywhere. Welcome back to Business Week on Horizon News. I've been talking to Fumi Ogbue, Karim, Charlotte Essiet, and Kelvin Emmanuel on the 2024 outlook for the Nigeria oil and gas sector and 2023 in review. So Kelvin, I'm going to come back to you in Abuja. The 2024 budget assumptions are forecasting 1.74 million barrels a day. I presume that also includes condensates. What is going to help us ensure that we keep that forecast, or at least make it a reality, given some of the macroeconomic challenges? What are your thoughts?
Well, I'm struggling because in December I heard reliably that Shell and NNPC and Mobil are supposed to supply Dangote with 6 cargoes, totaling at about 6 million barrels of crude. I also hear that 2 of those cargoes has been diverted because 2 of those cargoes were committed to a forward between NNPCL and one of the international oil traders. I won't mention the name.
Kelvin, sorry to interrupt you. When you say
the question I have is,
Kelvin, when you say you hear, can you tell us the source?
Well, I'm not going to. I don't want to quote my source, but 6 million barrels of crude oil was supposed to be supplied to Dangote refinery midstream, and I hear that between now and January, only 4 million barrels will be supplied to him. So if, based on the provisions of PIA 2021, Dangote refinery is struggling to get feedstock from producers in Nigeria, and his board might decide that they want to hedge their risk by sourcing for heavy crude from outside Nigeria, which is a little bit cheaper, how are we talking about reaching 1.7 million barrels target and having $77 per barrel as a budget assumption? It doesn't make any sense to me. You know, if you look at that budget, you see that deficit financing is 48%, Rolake, and the capex to your government revenue has gone up to 94.8%. And the debt servicing and refinancing cost has gone up from 6.5 trillion in 2023 to 8.1 trillion in 2024 because of revaluation on your foreign exchange losses. It doesn't quite add up because the strategy of the government, I heard the DG of Budget Office talking about the fact that 27.5 trillion is low for a country of 219 million people. But the DG of Budget Office is not talking about how he intends to raise the tax to GDP ratio for petroleum product tax, for all other taxes from the real sector, non-oil sector. He's not talking about how he intends to raise the revenue to GDP ratio from the current average of 10.5% to somewhere around 16 or 18%, which is a comfortable level to raise revenues to reduce the amount of debt. The government plans to raise 7.8 trillion naira in debt to finance the budget. The question I have for them is how are they going to raise the money?
Okay, Kelvin.
So when I look at the budget assumptions, it doesn't quite add up.
Okay, well, I think you make some very valid points there, which points to a broader issue around oil production. You know, everything is sort of interlinked in the Nigerian economy. We rely so heavily on oil revenues. And if you look at what's happening today in the sector, I'll start with you, Kola. You know, the Trans-Niger pipeline, which many people relied on, was shut down for about 2.5 years, 2.5 years. I think parts of it have now opened. So today, what a lot of companies are doing is that they're trucking and then barging, and so that they can take it to FPSOs to then sell it for lifting. And that entire operation can cost like $20 per barrel to $30 a barrel or more. So there's still a problem. Whilst NNPC has made some improvements this year through surveillance, there's still a problem with production. Now, there's no reason why Nigeria should not be doing 3 million barrels a day, even 4 million barrels a day, if you look at our reserves. What else can we do, and I'll start with you, to really change that picture so that it provides a solid economic base and foundation to achieve all those budget goals that Kelvin has pointed out?
Look, Rocket, the problem has got to be unpacked in two phases. The first critical one is capital.
Okay.
How do you finance these lofty targets? We know it's great, 3 million, 4 million barrels. Someone's got to put the capital in the world of decarbonization. Where the providers of that capital. That's number one. The second one, which should have been a positive to Nigeria as an oil and gas country, talking about to buttress the 3-4 million possibility, is internal consumption in Nigeria, just by looking at our refining capacity alone, is 1.1 to 1.2 million barrels a day. That alone should be a major pressure from government to focus on the oil and gas sector in making sure we're a 37 billion barrel reserve country, 2P today. So producing 3 to 4 million barrels is nothing at all. If you're consuming 1.2 locally,
yeah.
Dangote refinery, there's 3 NNPC refineries, there's a lot of other smaller refineries, that's 1.2 million barrels. So today, my alarm is Nigeria is only producing enough for the refineries in country, and we have nothing to sell outside.
Yeah.
That should be an alarm to government.
Yeah, and you make some valid points. You know, there's all sorts of aspects to it. There's a funding, and I think recently it was Austin Avuru that talked about $25 billion needed to fund and get Nigeria to 4 million barrels. But one of the other bottlenecks we're seeing is this issue around stakeholder management. There was a recent dispute, and Charlotte, I'll ask you about this one. There was a recent dispute between, I think, some oil companies and some unions, which was going to affect about 300,000 barrels of production. You know, in this economy, every little counts. So in terms of stakeholder management, what more can be done? Because it seems between Pengassan and New Peng and the unions and some of these stakeholders or even communities, there's always some strife or some issue.
So I look at stakeholder management or community disputes in two folds. For you to be able to get a hand of it, you must be extremely transparent and sustainable. You cannot come into a community with a lot of high hopes and you're not taking them along. It has to be project managed from start to finish. You have to take them along as partners. Now, as operators ourselves, what we also need to do is you must identify, you must consider, you must be able to have an open concessions to be sure that whatever you're doing, whatever project you're bringing out is sustainable. When you're transparent, it's easier for anybody to say, this is the project we're coming out with in whichever local government or whichever community. This is what the objective is. How are we going to go through it? You bring them along. I know that sometimes we have a lot of disputes and we can't go forth. But as long as you're transparent and you're very sustainable, projects are sustainable, it's easier for everybody to see through you. And you know, we've had a lot of industrial relation issues with it's Pengassan, New Peng, name them. What is the objective at the end of the day? How does the community feel? And we have the PIA, which Fumi and I were actually in Abuja when we were having stakeholder engagement on the PIA. And one of the key things that we always talked about was the host community. That line in the PIA has to come to birth. We have to take it as a project. We have to be able to look through it and say, this is exactly going to work. And then let's go through all of that.
Yeah, fantastic responses. For me, I'd like to get your thoughts on this. You heard about the funding issue, the challenges, you heard about the stakeholder management. You know, I'd love to hear what Zigme, I guess you personally also think about all these issues.
I mean, funding the gap is a big deal. Investor confidence is increasing, as I said. But I think Nigeria itself needs to invest, I think, in this industry. We need to depoliticize it. I've said it consistently. Create an energy corridor where there's no politics. It's all about results. And, you know, as they say, I think it was Kevin that was saying, we can't meet our OPEC targets and we're not taking advantage of the window that has opened globally. I mean, there's Ukraine-Russia war that means that Nigeria can fill in, you know, some of this gaps that exist. But I feel like we're not taking advantage of it. You know, there's a lot of regulatory delays still with bringing assets onto production, taking FID, NNPC funding its own share, and just almost declaring a state of emergency on E&P activities. As I said earlier, yes, there is increase, but it's just not enough. Somebody needs to fund new oil. Somebody needs to fund, restoration works, remedial works. And I think it needs to be the government, it needs to be the country, it needs to be the NNPC, it needs to be all of us as Nigerians that are involved in the sector. Expecting that it's going to be foreign capital alone is, you know, no one cares.
Right. And in fact, a lot of that foreign capital is focused on climate.
It's going to renewable energy, and it will go, no matter how long we shout and how much we say it. If we don't put our money where our mouth is, we're not going to get all that incremental volumes that we want. And whilst I think it's a good idea to do non-oil, but non-oil is going to be funded by oil. So we need to get the sector right first. Focus on bringing all the parties to the table. Let the host communities believe and understand that they're in it as well. Let the women be involved. Let the finance people put their energy, you know, the banks around funding. In trying to raise funding for my marginal field, I went to so many banks and all of them said to me, no, we're not funding marginal fields. How is going to fund it? You know, if all our finance people sort of don't get their heads around creating the right frameworks to fund the sector, unfortunately, because I think service companies, we're here to do the work. Right. We're competent. But we can't take the upstream risk. You know, we can't take it. We need the upstream industry to decide that it wants to do all these projects and put the money on the table. And I also think looking for external investors is a big waste of time. We have a lot of investors here already, you know. What about bringing them all to the table to say, okay, guys, what do you need? You, Shoreline, what do you need to get your assets to have incremental volumes? You, Sigma, your tiny little marginal field, how can we help? NNPC, Chevron, Shell, you get everyone into the room and let's have a discussion around what needs to be in place.
I'll say this, Rolake. I think one basic principle that Nigeria needs to always remember. 20 years ago, Nigeria was a big producer in the world, and Africa, we only had 4 producing countries. So Nigeria, Angola, Algeria, and today, oil, and Libya. Today, oil is no longer the preserve of these countries. It's found everywhere. Ivory Coast has just found, Eni's just found made a big discovery in Ivory Coast. Mozambique, Namibia, Senegal. So reality is we're no longer the show in town. There's a lot of alternatives for investors who are serious to go to. Less hassle with local communities, less problems with telling them you have to have this or you have to have that. So people, look, efficiency of doing business and the attractiveness is what drives capital towards that location. And Nigeria needs to be serious. But the plus Nigeria has, very simple. You have a lot of ingrown local investors who are serious and committed, who believes in the country and wants to operate here. They need to be encouraged because we're not going anywhere. This is our country.
Absolutely.
Right? So that's important. But you see, the biggest spender, the biggest elephant in the room is government. If government's social commitment to the country, it doesn't matter how lofty the ambitions of government is. All the budgetary positioning, 90% is coming from oil. So if oil is sick, Nigeria is sick.
Ultimately, yeah. And so I have to ask you all, because you're all operators, you've still managed to make it work, even in this difficult environment. You're all still in business. You're a local services company, you're in service, you're also in operation. So how have you actually weathered the storm and the challenges. You haven't just rode on love for country or riding on optimism. There are clearly some strategic decisions you've taken as businesses to build that resilience and sustainability. So I'd love to hear a few of those points from each of you. I don't know who'd like to start. Charlotte, perhaps.
So our sector has various verticals, and our ecosystem just continues. For us, what we've been able to do is just look inward, have strategies and tactics that will take us around, and then just dive in. It's not you don't have a playbook that has already been set for you to say, when it doesn't go this way, press A. When it goes this way, press B. So you sit back, nose dive into yourselves, and then shut down a few things that, will take you to the next level. Start to collaborate, start to engage, and see how best you can go along. Collaboration for me is very key.
Yeah.
You can't do it alone. I think we're at the industry level where we all know that I can't be Charlotte alone. I need Rolake, I need KK, I need Fumi. We need to run this together. So that's what we've been able
Fumi,
to
I'd
go
love
through.
to hear your thoughts on that.
I mean, what we decided to do is diversify.
Okay.
So pivot into, prior to now, we were just service. And we decided, we need to go into projects as well. So that's when we started to invest in the marginal field, in the gas flare side. And also we're investing in mining.
Okay.
Sort of looking at the extractive industry, to say, okay, what else can we do?
Yeah.
Transferable skills and competencies.
Okay.
So that's how we've really managed to stay afloat. I mean, there was one time we were even selling COVID materials.
I think a lot of companies were. Kelvin, I'm going to come to you. The president reaffirmed the, reappointment of the GMD of NNPC, Malam Military, which signals that he's confidence. That's a vote of confidence in his ability to take NNPC Limited to the next level. What are yours and Nigeria's expectations of what his priorities should be, given his reappointment and given the heavy weight, that's on his shoulders with regards to NNPC? Briefly, please.
Nigeria, the government needs to realize that it's the elephant in the room. Nigeria needs to invest in government, because every time oil and gas.
Sorry, I think we lost Kelvin there in terms of sound, but I'm going to come back to the studio audience. Now, I want to talk about some other important things. First of all is skills and talent retention. We know that the oil sector is increasingly globalized because it's a technology-heavy sector, and we've seen a lot of young professionals decide to find greener field elsewhere. So what can we do to retain talent in this industry locally? Because if not, that will just add to the challenges that we already have on the ground. Kola, do you have some thoughts?
The beautiful thing about the oil and gas sector and talent retention in Nigeria, yes, we've seen people attracted to go overseas with better offers or seemingly better offers. But what we've seen also the last 6 months, quite a number of people asking to come back.
Okay.
Because it's not really necessarily green on the other side. And there's nothing better than home, they've realized. The oil and gas sector is dollarized, so the income gap is not that bad. So what we've seen is Nigerians are equally talented because you've got third generation oil men in Nigeria. And what is even more important, if you look at the service companies, the big ones, the Schlumbergers, the Baker Hughes and stuff, you see series of Nigerians having been through those organizations who are international, and they're now coming back home at the twilight, the end of their careers, wanting to get involved here because they want to settle and retire here. And so you see people exiting, but we also see people coming back, wanting to participate either by being self-employed as consultants, or by going to gainful employment in companies like ourselves in helping shore up those gaps.
Yeah, and Fumi, I'm going to ask you that, but I wanted to throw in an extra thing. Obviously, NCDMB, the Nigerian Content Development Monitoring Board, has been at the forefront of a lot of the local content drive. Now we've had a a sort of new era of management. What is your assessment of the work that has been done to date by the former ES, Simbi Waboshe, and what are your expectations of this new management team going forward, both in terms of talent retention, but also broadly local content, developing local capacity to develop Nigeria's upstream oil sector?
One of the things that I've always been passionate about is democratization of access to opportunities. And that's, I think, what the NCDMB has done successfully over the last few years. You know, so they've made opportunities available, the knowledge of the opportunities available publicly, and they've offered a lot of support to companies, to their staff, to build capacity.
And women.
And women, and they've provided access to funding for people that do get those opportunities to be able to fund them. So my expectation is that they continue to do that. I mean, the law is there, it's very clear. So, you know, just continue to do it.
Okay.
And I think the bar has been set very high for the new management. So I can't imagine them sleeping. You know?
Certainly not in this climate.
Yeah. Because for us, land and swamp is where local companies can thrive and can grow and can develop their capabilities to be able to go to, you know, the offshore and deep water terrain. So I would expect that they keep that, you know, space, you know, sort of as a safe space for us to grow and learn. But for me, I think in terms of talent, one of the things that is critical is that we must continue to build and deepen that pipeline of talent, because people will leave. But the thing about the oil industry is because it's very highly technical, and it tends to be the same people. But the weakness or the gap that I see is that pipeline is getting weak. Traditionally, the international oil companies were quite good at identifying critical jobs, making sure that there was a strong pipeline of young people coming behind the more experienced ones. I mean, for an example, to train a well engineer takes about 8 years. So it's not something that you can sort of wake up and say, oh, my well engineer is sick. You've got to bring people behind them and continue to train them. So I think the Nigerian upstream companies not just need to understand that talent, building a robust talent pipeline is key.
Absolutely. Thank you very much. We've almost run out of time, so I hear that Kelvin is back with us. Kelvin, I'd asked you about the responsibility that lies before Malam Mele Kyari as he, following his reappointment, with regards to NNPC. But because we're also rounding on the program, you know, we started with a bit of the sandwich method, started positive, talked about the challenges. Can you also give us a bit of optimism, notwithstanding these challenges? But first, please quickly respond to the question on NNPC.
Well, to be honest with you, Rolake, I think NNPC needs forensic audit. I support His Royal Highness Sanusi Lamido Sanusi's call for a forensic audit into NNPCL, the migration from DSDP to PPSA. I also think that NNPC needs to change its business model. NNPC today, the NEPL subsidiary, doesn't do more than 150,000 barrels per day in production. NNPC needs to become an operator, in line with what Fumi was saying earlier about the government investing its own capital in the oil sector upstream, and need to pull back from the attention, too much focus on foreign capital and foreign capital. If you look at the macroeconomics right now, the inflation, interest, and exchange rates, there's no forward guidance. It doesn't really provide any confidence for international investors to bring in capital into Nigeria. I also think that the upstream sector, especially the government, needs to look at the fact that it's more profitable for you to have commercial refiners and you supply them with crude oil, because in my calculations, a barrel of crude oil will give you around $211 in terms of output for about 9 to 10 different transportation and non-transportation fuels. So this strategy of staying in OPEC, not meeting up quotas, and looking at exporting crude oil as a means to generate revenue has to shift to, we're going to use our crude oil in terms of the share in production sharing contract that comes to NEPCL, and considering that NEPCL owns 20% of Dangote, for example, and is going to own 20% of BUA, to refine locally and then export, you know, to get more revenue and then bring in tax and bring in net export proceeds to Nigeria to stabilize the FX markets. But as regards Malam Melegiare, I think he has his work cut out for him because he has to move from NNPC being a state oil company that takes orders from the villa to when he gets IPO'd and goes to the public market to really being accountable to the board and to shareholders and becoming a private-run company that is efficient.
Yeah, thank you very much, Kelvin, for ending on that note. Ladies and gentlemen, it's been an absolutely fantastic discussion. As you know, we could go on and on about Nigeria's oil sector, but I think, there are some challenges in there, but there are also some positives. I think we see the signs. And, NNPC is going to obviously play a key role if it wants to become like the likes of your Aramcos and your Petrobras's and some of the other big national oil companies around the world. But we wish you all the best as oil service companies and operators in the field. Thank you so much, Charlotte. Essiet, Kola Karim, Fumi Ogbue, and live from Abuja, Kelvin Emmanuel, for joining us on the discussion today on Nigeria's oil and gas sector outlook. Well, that's all we have time for today on Business Week. You can, of course, continue the conversation with me on X. Do join us next weekend. Have a lovely weekend ahead. I'm Rolake Akigwe-Fileni, and I'll see you soon.